Hi, welcome to Teach Me Online channel. In this video, we will be going over one of the CIE IGCSE accounting chapter that's on asset disposal. Okay, let's talk about disposal. From time to time, business will dispose their assets. The reason may vary. Sometimes when the assets, for example, a machine is old and it is not as efficient as before, firms will sell them, right? Apart from that, firms also sell the old assets to replace with improved technology. Right, something new came up, and then they want to upgrade their software. They want to upgrade their system. They do get rid of the other older assets. Also, at times when a firm needs to raise cash and they have left with not much choice, they can resort to selling idle assets to raise cash. For example, during pandemic, most of the businesses were shut down due to lockdowns, and they might have some capital cash flow problem. So when they have this, sometimes they do have some idle assets that's lying around and they don't need it at the current capacity, they might sell them to raise cash. Yeah. So these are the few reasons why firms actually sell their assets. Now in this chapter, there are two important things for you to know. First, what is the gain or loss on disposal? It is important for business to record any gain or loss from selling off their assets. Yeah, this is according to the prudence principle. Yeah, what does prudence principle say? It says that any income or expenses should not be over or understated when preparing the financial statement. Right. On the second important thing that you need to know for this chapter is that how to record the double entry for the disposed asset. Now, you have to know the recording of the journals and the T account. Right, now for now we are going to look at how to calculate the gain and losses. Now this calculation is easier to use for your multiple choice questions. Yeah, as for the structured questions, you might need to work out the T's and journals. Most likely the questions will be how to derive a journal out of the questions they've given you. So now let's have a look. Okay, for now, we will look at how to calculate the gain or loss from disposal. To do this, we need two information. One, the selling price, basically how much the asset was sold for. And secondly, we need to know the net book value, right? To find net book value, it is basically cost minus total depreciation. Now, for example, let's say you bought a computer 4 years ago that is worth $4,000, right? So these $4,000 represent the cost. Okay, you sold it today for $1,200. So your selling price when you sell it today is $1,200. Yeah. Now, let's say when you sell it today, you have depreciated this computer up to around $3,000. So the total depreciation is $3,000. Now, with this information, we can find whether it was a gain or loss by selling or getting disposed this asset. Now, the selling price was 1,200. Now, how do we find net book value again? Net book value is cost minus total depreciation. So our cost was $4,000 and the total depreciation was $3,000. So our selling price is still 1,200. Now 4,000 minus 3,000 gives us 1,000, and here it is 1,200. The selling price was 1,200. Now we realize that the selling price is more than the net book value, meaning this is the amount that you have written in your SOFP as of today, right? So it looks like you made a gain. Why? Because your selling price is more than net book value. You have gained by selling the laptop or the computer in this case. Yeah. So how much is the gain? The gain is the difference between the selling price and the net book value, which is $200. Okay. So you can just do this if you have a multiple choice question, or the question is just asking simply for gain and they're not asking you to prepare any journals or any T accounts for this. Now let's look at another scenario. Assume we have the same computer which we bought it at $4,000, right? But the depreciation till date has been for $2,000. So we have depreciated the computer for $2,000, and then the selling price is still 1,200. Now what you get here is net book value of 2,000, which is more than the selling price of 1,200. Now we can see the book value is higher than the selling price. So this shows that the company had made a loss on disposal of $800. Right, that's it. So this is how you actually calculate your gain and loss. You can see it clearly. If your net book value is more than your selling price, it shows that company has made a loss. But on the other hand, if your net book value, which is cost minus total depreciation, is lower than your selling price, then it will be a gain for the business. Yeah. Okay. The first part is done, which is the calculation, and you don't have to do any T account. In the second part, we will look into how to do the T account. But before we do that, let's do an example. In this example, they mentioned the machine cost about £20,000 on 1st January 2012, and it was sold in 2014 for 3,700. Right? The total asset has been depreciated at 25% on cost. Yeah. Now, the thing is, a small tip here, to do any disposal question, it is always important if we can do the depreciation table. We figure out the total depreciation for the machine and the rest becomes easy. Now, let's do the depreciation table here. Right now, on the depreciation, what we have, they say this is on cost, so that this means that it is a straight line method, and we know it is the cost price is 20,000. So at the end of 31st December 2012, the depreciation for this machine would have been 20% of 20,000, which is $4,000. Yeah. Now, the second year, 31st December 2013, we have the same amount because this is a straight line method, times 20,000 is the same as 4,000. And we sold it on 31st December. So there's another 1 year of total depreciation. We need to figure that out. 31st December, 20% of 20,000, which is 4,000. So total depreciation till date is 12,000. Now, once you get this out of the way, the rest of the thing becomes easy. Now, what was the formula again? We have to find the difference between selling price and the net book value. Now, we know the selling price was £3,700. The net book value is simply cost minus total depreciation. Another word for this is accumulated depreciation. It means the same, yeah? Right, so we have 3,700 here. Our cost was 20,000 and total depreciation till date is 12,000, as we have calculated earlier. So this gives us our net book value at £8,000 and the selling price at 3,700. Now in this case, we can clearly see that selling price is lower than your net book value. That means this shows us that we have a loss because we valued the machine at 8,000, but in actual you could only sell it at 3,700. So that gives us a loss of £4,300. Right? So this is how you do them. Hope this was easy. Right. Now that first section is done. The second section, we have to learn how to prepare the asset disposal transactions. Yeah. Now, basically what happens is we have to remove this asset from its non-current asset category. We have to remove it from your provision and also transfer all this to your disposal, so that we can calculate the gain and loss. So that's basically very simple 4 steps that we have to follow. Now, if you remember these 4 steps, you don't have to worry about not able to do these questions. Yeah. Now, let's have a look. Now, what is the first step? The first step is simply you remove the asset from the respective asset account and transfer it to disposal account. All right, that's it. You move away, you take away your asset. Now, the secondly, since this asset we would have provided provision for depreciation, so we simply remove this assets provision. So take away from the provision for depreciation and transfer it to disposal because the asset is no longer around. All right, so we do that. Now, thirdly, the third step is basically you record the sale of the asset. Where do you record them? In your disposal account. And finally, the last step is for you to calculate gain or loss on disposal and transfer it to income statement so that we can calculate profit or loss for the year. Yeah, so that's the four simple steps that you need to know. Now let's have a look at this one. For example, let's say you have the car. Now the cost of the car was $40,000. So you have a car account, or we can call it vehicle account, doesn't matter. Now in your vehicle account, your brought down was 40,000. Now since you sold this asset is no longer yours, we can transfer this to disposal. So what is the value we transfer? We transfer the cost value because the asset is no longer around. So we already transferred this to disposal, yeah? Now let's look at how the disposal account look like. Now in disposal account, since this is credited, we will debit here 40,000 and we got this from your car account. So we have transferred, what do you call that? This amount to disposal. The first step is done. Now the second step would be to record the provision. Yeah. Now, provision for depreciation car. Now the brought down would have been on your credit side because this is a provision. Then let's assume that's $20,000 worth of depreciation for this. Now what happens? We have to remove this and send it, as we said in the step 2, we have to remove and send it to disposal. So basically we will debit them disposal 20,000. Because this is debit, on this side we will write provision. Please write in full term, yeah, the whole sentence, 20,000. There you go, that's done. So this account is closed as well. So we have closed the asset account and we have transferred the provision to the disposal and we are done with the second step. Now the third step is to record the sale. Now let's say we sold this car for $10,000. So that's your selling price. So we sold this car for $10,000. As we said, we receive cash for that. So when we receive cash for this, we would debit bank or cash and credit disposal. Yeah. So that's what we're going to do here. Since debit the bank account, here in disposal, 30,000 is written as bank. Okay. So the difference is your gain or loss. Now let's look at this. This is 40,000. So this one should also be 40,000. The difference is 10,000, which is transferred to income statement. There you go. Now, what does this 10,000 mean? Is it gain or loss? Now, how do we know? If you record in your disposal, your income statement is on your credit side, that means it would be debit in your income statement. It will be debited in your income statement. Thus, what does the debit information in an income statement tell us? It tells us that it is an expense. So, since it is an expense, we know it is a loss of 10,000. Now, if your income statement was on your debit side of this disposal account, this means we will record it as a credit option in your we would have credited this in your income statement. Yeah. So that means we have gained from this transaction. Right. Now, if you find this a bit difficult to figure out whether this is a gain or loss, what I would suggest you to do is simply do the selling price and the net book value to figure out. Now, the selling price is 10,000. Now, the net book value is 40,000 minus 20,000. So, selling price is 10,000 and your net book value is 20,000. So this shows that your net book value is higher than your selling price. So it is a loss. So that's another way for you to figure this out. Right. I hope you understood how to do this. There's just basically 4 simple steps. Let's recap. First, remove your asset from your asset account, take it away and send it to disposal. Secondly, we will remove the provision that we have made for the car to the disposal account. And thirdly, we will record the bank amount, how much we sold the car for. And lastly, we will figure out whether there's a gain or loss in the transaction, right? Now, if your income statement appears, the 10,000, this amount appears on your credit side, this means it's a loss. If it appears on your debit side, that means it's a gain. Why? Because if you record this on your credit side on your disposal account, when you transfer it to your income statement, it will be recorded on the debit side. Okay, remember, any expenses are always recorded on the debit side, thus it's actually showing us it's a loss. Any income is recorded on the credit side of the T account. So if you have an income statement, you receive some information on your credit side of your income statement, then that means it's a gain. Okay, that's it. We are done. That's all you have to know for this chapter. Now, let's look at this example on how to prepare the transactions. Yeah. Now, a lorry is purchased on 30th June 2014 for $10,000. It is to be depreciated using straight line depreciation method. So we know it's a straight line method, and this is our cost. And oh, there's an H missing here. Method. On a monthly basis with an expected scrap value of 2,000 and a lifespan of 5 years. Now, this information tells us that the depreciation method is a straight line method. If the lorry was sold for £3,900, so this is our selling price, calculate the profit or loss on disposal. Now for this question, we are going to do both method. The first one is just calculating the selling price and the net book value, and we will figure out the gain or loss. And secondly, we will try to do the transaction, all the 4 transactions. Yeah. Now, for any questions for disposal account, as I was mentioning earlier, always try to do the depreciation table. Once the depreciation table is out of the way, you will find this is much easier to do. Okay. Now, please pay attention. They say depreciation is on monthly basis, and you bought this machine, this lorry on 2014, and you're disposing them in 2017. Now, this is a straight line method. Now, how do we work out this depreciation for a year? We can find our depreciation using the formula cost minus scrap value divide by number of years it's been with us. Yeah, so expected to be with us. So cost of that lorry was £10,000, and the selling scrap value is expected to be $2,000, £2,000, sorry, and the number of years it will be, the lifespan is 5. So from here we know that it is 8,000 divided by 5. That should give us £1,600. £1,600 per year. So this is the depreciation per year. Now, using this information, we can calculate the depreciation for until 31st December 2017. So 31st December 2014 is the first year. Then we have 31st December 2015. And the next one is 31st December 2016 and 31st December 2017 because we sold it then. Now in the first year, we only had this machine for 6 months. Yeah, so we just have to do a 6 months worth of depreciation. How do we do that? 1600 times 6 over 12. So we prorate it monthly. So that should give us 800 pounds, right? Now the rest, the depreciation would be 1600 yearly. So total depreciation for this machine is 5,600 pounds. Okay, that's it. So this is your working. You have done the depreciation table. Let's try to find out the gain or loss on this lorry that we disposed of using the difference between selling price and the net book value. Now the selling price, as we know, is 3,900 pounds, whereas the net book value is 10,000 minus 5,600. Now where did we get this 5,600? We got it from here, where we know the is total depreciation till date is 5,600. So we have 3,900 and then 10,000 minus 5,000, that is 4,400. Yeah, so your net book value is more than your selling price. So this clearly shows us there's a loss of 500 pounds. So there you go. So this is the first method. You just find the gain or profit, gain or loss on the disposal by just doing the difference, which shows that the net book value is much more higher than the selling price. Okay, now let's look at how to do the T accounts for this. Yeah, there's 4 steps, 4 simple steps that we are going to use. So the first one we have to do is transfer this to, so we were going to do the first step would be to transfer this to disposal account from your asset account. Now what's the name of our asset? Let's call this a lorry account. Okay, in your lorry account on 31st December, they just want us to do 31st December 2017. So we know that 2017 January 1st, the balance brought down must be $10,000. Okay, then from 2014 you have been doing the brought down because there's nothing else happening in this account. So the balance brought down on 2017 January 1st is $10,000. Now the first step was to remove them. So we will transfer this to disposal account, which is 10,000. There you go. You're done with your lorry account. All right, now let's do the second one, which is your provision account. On 2017 January 1st, what are the depreciation you would have done so far? You would have done the 2014 depreciation, 2015 depreciation, and also the 2016 depreciation. So your balance brought down on this 1st January should be 1,600 plus 1,600 and another 800. That will be about $4,000. All right. So 4,000 pounds were the brought down for provision for depreciation on lorry on 1st January 2017. So what's happening on 31st December? You sold it, but before that there was a depreciation you have to account for that year, which will be transferred to income statement. Now to understand why is this so, please refer to the provision for depreciation video. Yeah, right. Now on 31st December, something else happened, which is that we disposed this asset. So we have to transfer this to your disposal account, which is altogether 5,600. That's it. So the depreciation account is done, right? Now, thirdly, the final account that we have to prepare is called the disposal account. Okay. Now, in your disposal account, they just basically transfer all the information from your lorry to here, and then you transfer the provision to here, and you also transfer the selling price, the third step, which is 3,900. Okay. So the difference will be your income statement. Which side is more? This side is more. So we will balance it with this information here. And the amount you should get is 9,500. So the income statement, the gain or loss here is 500. In this case, since income, the disposal account, the income statement is credited. In the income statement account, you would debit. So that shows it is a loss of 500 pound. Yeah. So this is how you do it. We are done with this chapter. Right? To recap, there's only two things you have to know in this chapter. That is how to calculate your selling price and your net book value. The way they can ask the question, they can ask directly the gain and loss. So in that case, you don't have to do the T account. You can just compare your selling price with your net book value to figure out whether the disposed asset had a gain or a loss. On the other section, we looked at how to prepare the T accounts and transfer them to disposal account. Okay. Now in the next video, we will attempt some past year questions and solve them. So if you want to do some extra exercise, it's highly recommended that you watch that video. Alright, that's it for this video. There's another video where we have done a few past year questions and solved them. So if you want to practice more on this chapter, I highly recommend you to watch those videos as well. Now, meanwhile, if you have any questions or doubts on this chapter that you feel that the information given was not clear enough, you can always leave a comment below and I'll try to get back to you. Thank you.